Hello traders and welcome to another video review. Today is Monday, December 5th, 2022. Let's find out what is going on the Forex calendar today. We are starting new trading week, and those are the most important events of today. First, we got the ECB President Lagarde speech already published. Then we have a Composite PMI and the Services PMI data from the UK. And during the New York session, there is scheduled for release ISM Non-Manufacturing PMI data from the US. As you can see, these data are about to go a little bit down from 54.4 to 53.1 points. So not too many data, very important data scheduled for the release today. Nevertheless, there's something going on here, so let's focus on the current situation. We are going to start with the majors review, and then we will see what we can do for the Bitcoin and, for example, gold. So let's start with the analysis of euro dollar. For our chart of the euro dollar is showing us a nice movement to the upside. As you can see, this recent spike up and then the pullback was made just to hit 100% of the extension. So what I mean here is that you can see the ABC to the upside extended from the recent low. So you got the low at 1.0217, then you got the local high 1.0500, then of course the small pullback towards 1.0291, and then the C wave was made recently at 1.0583. However, the target is still just a little bit above the level of 1.06. The length of the wave C is equal to the length of the wave A measured from the wave B. So we got ABC corrective pattern made here. However, if you remember, we got the impulsive wave progression to the upside developed from the lows. So as long as the level of 1.0480 is not clearly violated, this can still be develop into more impulsive pattern. Nevertheless, if we take a look at the recent highs, so if we take a look towards the wave C highs, please remember that those were made just around the level of 1.0585. We got this high made on the lower momentum. So we got a bearish divergence here between the wave A high and the wave B and wave C high, and even this smaller high here. So it looks like the correction is waiting, or a deeper pullback is waiting, of course. So again, let's focus on 1.0480, 1.05 basically, because any breakout below this level would likely be developed into a bigger or deeper correction, and the ultimate technical support is still located at the lows of this trend line here, maybe somewhere around 1.035. So this is how it looks on the euro dollar. Let's find out the British pound, of course, because there's plenty of data on the British pound scheduled for the release of the data, the PMI data. So we are waiting for another movement to the downside. So what is going on here is kind of very clear. We are still moving up. Let me just switch to the daily time frame chart so you can see it even, or maybe even weekly, so you can see what I actually mean. There you go. This big down wave here had been completed after that pin bar was made. That pin bar here was made, and the whole big sell-off had been terminated. The low is, of course, around 1.0345. Then we retraced almost 50%. We retraced 50%, almost 50%. Very narrow range is going to be covered in order to hit the 50% Fibonacci retracement of the last big wave wave down. As you can see, there is some sort of the pin bar located here, so there is some sort of the resistance located around 1.2278, 1.2350. Nevertheless, it doesn't mean that we cannot retrace even higher towards 61% of the Fibonacci retracement. Let me just find out for you guys where it exactly is. And if we take our Fibonacci retracement tool, then of course we can see that 61% is just here around 1.2779, and the 50% has been hit already, 1.22010. So 50% is done. Now we're waiting for 61%, and despite the fact that it looks very bullish and the momentum is strong on the weekly time frame chart, please notice the fact that this is still a retracement during that down trend that was made from this high in May, the end of the May 2020. One very nice movement to the upside. We got retracing 50%. We got another 61% level waiting for the test. Of course, as long as this level, 61% of the Fibonacci retracement of the last weekly wave down, is not clearly violated. So there is no, let's say, weekly candle close above this level, we cannot say that this is a new trend to the upside. This is still being considered as a downtrend, and the downtrend is here, and this is only a correction, upside correction during the downtrend. Momentum is strong. Level is right now 57 points, so we are definitely doing some sort of the very strong rebound, and that's the outlook for the British pound. Let me just take a look at the crude oil. This is a weekly time frame chart of the crude oil. Big weekly spike back in 2020, big candle here in 2022. This is March 7th of the 2022 pullback. Then again, bulls tried to resume the uptrend. We got the harami here, and of course then we are moving lower and lower. So definitely this weekly chart should tell us that the market participants are now poised to the downside, so we are going lower and lower. A recent low was made at the level of 73.60, so this is the low from the last week. So last week we get another new lower low, and please notice that if this is the high, this is the lower high, lower high, lower high, lower high, lower high, lower high. So what it means? It means the market, it's not doing higher highs, it's doing lower lows, lower lows. Even here, the lower low was made. There is still a room on the weekly RSI to go lower towards the level of 30 in order to hit the extremely oversold conditions, just like it was made here 2 years ago. So there is still plenty of space to go for bears, and the next target is the low from the 29th of the November 2021, located at 62.43. so that's the next target, and very close to the target there is another low at 61.89 from the 23rd August of 2021. So that's a kind of a interesting technical support. Let me just put the lines for you guys. So this is very interesting technical support just around here, very tight. So that's the next target. Basically this is the next target for the crude oil as well. Please keep an eye on this market. It is moving lower. It might be moving even lower. S&P 500 index doesn't actually work, so let me just switch to something else. This is the euro dollar. Let's switch to the US dollar to Japanese yen, and switch the time frame to weekly, and let's take a look at this movement here. Another pin bar made in 2020, then nothing happened for almost 1 year, and then we started to climb very high towards 146.150, even 151.62 is the recent higher high. Very big pin bar here at the top of the rally, and since then we are moving, of course, lower. How much did we retrace on the weekly time frame chart? Let me just find out for you. Guys, the Fibonacci retracement of the whole big move to the upside is telling me, let me just switch the positions here. Let me just put it here and this to the downside. Oh, I want to grab my Fibonacci. There you go. And this means we retraced almost 38%. Let me move it here so you can see. There you go, somewhere around here. And we retraced almost 38%. From the top, from the very top to the very bottom, 38% is around the level of 132.45. So there is still some room for the bears to go lower. As you can see, multiple bearish divergence was made here. So it won't be a surprise if we got towards 38% or even 50% of the Fibonacci retracement of the whole big 2-year rally on the US dollar to Japanese yen. So please notice the fact that this is still possible. This is definitely possible. The momentum is already negative 43 points. Still room on the momentum to go lower. Still room on the chart to go lower. So please keep an eye on the US dollar to the Japanese yen as well this week, because on the weekly time frame chart it looks very bearish. Plenty of red candles, plenty of space to go lower. Next levels is 50% Fibonacci retracement and 38% Fibonacci retracement for the US dollar to Japanese yen. So that's the weekly outlook of the majors. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.